Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront and generate consistent returns year on year. So obviously we're going to be using options as our vehicle, so we need to know where we are in the options chain to start with. So if you just pull up your brokerage platform, we like to use Tasty Trade. We want to pull up just any underlying, let's just say Apple, so we can see this list of expirations. Now we've got our weeklies, and then everything else is our monthlies, and I'm referring to the expiration dates, of course. So our next monthly is October 18th, which is 22 days away. We like to be between 30 and 60 days out, so we're going to go with November 15th, which is 50 days out in time. And now that we have the information, we can go over to the watch list, and we can filter out every underlying that has earnings over the next 50 days. The reason for this is because earnings can have a negative effect on your P&L. It can mess up your deltas, increase volatility, etc., etc. It's something that we want to avoid for the main part of our portfolio. We can also filter out low liquidity level underlying. So what's left is a list of liquid underlyings that do not have earnings over the next 50 days or so. And finally, we just need to order the list in terms of high IV to low IV, or IVR even. And the reason for this is we want to sell volatility. Volatility contracts 80% of the time in the market, so we want to be on the side of volatility. And we want to sell it when it's high and play the contraction. So at this point we just go down the list and we just see what would look good, what would fit well in our portfolio. You might want to go back at this point, have a look at your portfolio, see what is in your portfolio, see if there's anything that needs to be added or changed or taken away. If you're already heavy in one particular sector, maybe you might want to think about adding positions in a non-correlated sector somewhere else. So we just go down the list. Obviously we've got silver, gold, we've got oil, USO, GDXJ, GDX, and we want to make sure we pick something that's got an IB rank of over 50. Over 30 is okay, but over 50 is really nice. So we've got Baba, we've got Baidu. Baba has had a nice little 8% run up recently. It's got an IB rank of 53.3, and it's got 4 out of 4 stars on the liquidity level. So I guess we could have a look at Baba. Go over to the trade tab, open up the November 15th options chain. And as we can see here, this is the options chain. This orange horizontal line shows you where price currently is with respect to the rest of the strikes. It's currently trading at 103, just over $103. And the vertical orange bar shows you the expected move of Baba over the next 50 days. At this point, we need to decide what contracts are we going to sell and where are we going to sell them. So we like to sell one call and one put, really simple, and we like to sell them at somewhere between a 16 and 20 delta, right, which will typically land outside of this expected move, which is what we want because we want our contracts to expire worthless and out of the money. So if we come over to the call side, we have got a 15 delta and also a 21 delta. So if we just be a bit more conservative to start with, go with a 15 delta on the call side, and then on the put side there is a 16 delta on the put side. So we've got this is called a strangle, a naked put, a naked call. The put is at the 90 strike and the call is at the 125 strike. This green bar here shows you our break even, or anything within this green bar is where we would make money. And as we can see, the green bar is completely covering the orange bar, which is good for us, and that's going to lead to a nice high probability of profit, as can be seen here in the bottom left corner. We've got a 76% probability of profit and an 86% chance of hitting 50% of max profit over the next 50 days. So very, very high, very high chances of being successful on this trade. Now, if we were to mark this on the chart, what would that look like? So we've got our strikes at 90 and 125. 90 is about there, and 125 is way up here. Way up here. As we can see, there does seem to be a little bit of skew. IV rank is very, very nice right now. 90 and 125 looks like it's a very wide range. Very wide range. And I think this is a nice position, all in all. It's a bit of an unknown because you can't really look left and compare it to anything. For the call mainly, but I think this is a good trade all in all. And if we look at the numbers, we can collect $260 up front, and our broker is only going to require 2.3k in buying power to open this position. So this is a very nice return on capital for a naked position. We're going to get $7.7 in daily theta decay. We've got a very high probability of profit, and overall, I think this is a great position. We're not going to place this position. We are pretty maxed out in our portfolio at the moment, but this is a very nice position for anyone that was looking for one. Now, if you don't want to allocate 2.3k to any one position, by all means, what you can do is you can just buy a contract a little bit further out to cover your short. So what you can do is you could go one strike lower or higher even on the call side. So you got the 125, you could just buy the 130, for example, and then you could just do the same thing on the put side. So we would just buy the 85, $5 wide on both sides. What that's done is it's massively reduced the amount of buying power that's required. As you can see, it's no longer over $2,000, it's $400. So this is probably much more manageable for people to put in their portfolios. You still collect $1 up front, still have a fairly high probability of profit. However, if you did want to go with this as opposed to the naked position and you want to cover your shorts, I would recommend being a little bit more aggressive, and that will allow you to collect a little bit more premium. It's going to reduce the amount of buying power that's required. It will allow you to collect a bit more premium. And this overall seems like a better trade than going with the 16 delta, like how we were back here. So that's how you find trades. That's a trade on Baba. We've got a naked position and a covered position, so it doesn't matter how big your account is. There's a position there for you. The only other thing that you need to keep in mind is the size of your positions, because it doesn't matter what you do or what you know. If your sizing is wrong, it eventually will have a negative effect on your account. So we've got a position sizing template that's free for everyone to use. The way it works is you enter in the size of your portfolio, say if it's $5,000. You then below that enter in what the current VIX level is. Let's say if it's 19.2. Everything below will then be automatically calculated for you. All you need to do at this point is use the information to form the backbone of your portfolio. Use it to form the structure. It will tell you how much buying power to allocate to a single undefined risk position, a single defined risk position, how much of your portfolio you should allocate to short premium in general, and it will make sure that everything stays consistent long term. The link for that will be in the description. Click the link, head over to the free position sizing template. If you do want to get involved on some of the positions that we are making, some of the plays that we're making, if you want to make money alongside us, again, click the link in the description, head on over to EDS Premium and get yourself signed up. We do have multiple portfolios, both small and large portfolios that you can copy. So it doesn't matter what size portfolio you have, there'll always be a position for you. There is a full course as well, so no previous knowledge is required. We will teach you everything you need to know. It allows you to learn and earn at the same time. It is a private community, so you can speak with myself and other like-minded individuals. And there is also a 100% money back guarantee. So if you studied our full course, followed our trades for a full 6 months and haven't seen results, then we will work with you for free until you do, or you can request a full refund. So it's completely risk-free on your part. Right now, it is £1 a month to sign up. once you're in, you don't need to worry about price increases. The price will be increasing though, but once you're in, you don't need to worry, as long as you don't quit and then rejoin at a later date. So with that being said, I will see you guys on the inside.